Good morning everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. Today I'm going to look at a couple of bearish wave counts for Bitcoin. This is not my wave count. I publish my analysis every Monday on my website for my subscribers on Pure Elliott Wave, where I give them a full, thorough rundown of my Elliott Wave analysis for Bitcoin every week, starting Monday because it's the start of the week. I've just done that. It was a 17-minute long video for them, which they've now got. Now I'm going to have a look at bearish alternates, just in case everyone wants to accuse me of a bullish bias. I really am trying to consider a decent bearish Elliott Wave count for Bitcoin. I'm going to show you two. This first one has multiple problems. This is why it's not my Elliott Wave count for Bitcoin, and the problems are too big, in my opinion, for me to have any confidence to publish this as part of my analysis, and this is why. This is the entire price history of Bitcoin. From this start here up to here, there's a 5-wave impulse. So far, this part of the wave count looks okay. You can see a 5-wave impulse complete here, and I'm labeling it cycle wave 1. Last 39 months. It's followed by a bear market that lasted only 3 months. So this is the first problem. This bear market, it's deep enough, but it's too brief to be a decent length for a cycle degree wave that's correcting a first wave that lasted 39 months. So this is your first problem of proportion. Now from this low to this high, this can be seen as a complete 5-wave impulse, no problems here, but within it you've got primary wave 2 lasting 8 months, that's longer lasting than cycle 2 1 degree higher lasting 3 months. Now sometimes a second wave correction of a lower degree can be longer lasting than a second wave correction of a higher degree, particularly when it's within a third wave that's a long extension, because when waves extend they do so in both price and time, and the corrections within them can take longer. But here the difference is just a bit too much really. Okay, so we could have a third wave complete here followed by a fourth wave. Now there's a really big problem in terms of proportion. Cycle 4 here, and that should say 4 not 2, lasted 14 months. That's so much longer lasting than cycle 3, which lasted 3 months. Now again, it's okay for a second and a fourth wave within a cryptocurrency to be disproportionate, but only if it's the other way around. Often it's a fourth wave that is brief and shallow compared to a second wave which is more deep and time consuming. That's because these markets will form parabolic growth curves, and parabolic growth, like here's a piece of it, starts out slowly, accelerates through the middle and explodes at the end. And so the second wave corrections in here are more brief and more time consuming than the fourth wave correction. So here it's okay that primary 4 is more brief than primary 2, that's absolutely fine, but here cycle 4 is more long lasting than cycle 2, and that's a problem. Now we move from this point here up to here, and there's some really big problems in here. If we see a 5-wave impulse complete at the last highs, now we've got huge problems in terms of proportion within cycle wave 5. We've got primary wave 2, which lasted 9 months, and primary wave 4, which lasted 19 months. Again, the fourth wave is more time consuming than the second, extremely unusual for a cryptocurrency. It's a valid wave count, but the problem of proportion means it's got a really low probability. You can't really try and resolve that by seeing 3 complete here, because now 3 doesn't look like a very good 5-wave structure. You want to see primary 3, but even if you saw primary 3 over here, primary 4 is still 12 months compared to primary 2's 9 months. The problem isn't as bad, but it's still not properly resolved. Now you've got another even bigger problem. You've got primary 4 that's lasted 19 months, and you've got cycle 4 that's lasted 14 months. This fourth wave of 1 degree lower is longer lasting than this fourth wave 1 degree higher. All of these problems of proportion, this wave count to my more experienced eye, I've been doing Elliott Wave for 16 years every day. This is really amateur. I would not publish something like this. It's technically valid, it meets all Elliott Wave rules, but it doesn't have what we call the right look. It's the proportion between second and fourth waves within an impulse that give a wave count what we call the right look. You have to acknowledge the right look for your particular market. Each market will have a different look. This doesn't look right for this market. Let's move on. This is my only serious bearish alternate Elliott Wave count, and this is a viable contender, but it doesn't have support from classic technical analysis. This wave count has no problems of proportion. It sees an impulse beginning here and ending here. I'm going to see this as wave A. Within this impulse we have intermediate 2, relatively deep and quite brief. Intermediate 4 is longer lasting than 2, and this is the only circumstance in which it's okay for a fourth wave to be longer lasting is if the fourth wave is a triangle, because triangles are particularly long lasting structures. The deepest part of the triangle lasted just 3 months compared to intermediate wave 2, which lasted 5 months. So the sharpest part of the triangle is more brief than intermediate 2, and this movement does fit beautifully as a regular contracting triangle, and it gives us beautiful alternation between a triangle for 4 and a zigzag for 2. Now we see intermediate 5 to end a 5-wave impulse, which I'm labeling primary wave A, followed by a 3-wave zigzag for B. A lasts 88 months and B is over within a year. This is the first year-long bear market within Bitcoin's price history, and it follows a huge 5-wave structure up. So this should be labeled as an impulse, and this should be a correction of the same degree. The proportions have a good look. Now we go from here to here. This is a really good looking 5-wave impulse. We've got 1, 2, lasted 9 months, 3, 13 months, shows a lot of strength, 4 over in just 2 months, really nice proportion between 4 and 2. They both subdivide as sharper corrective structures. 4 is not a triangle, 4 is more brief than 2. That's a really normal look for this market. And 5 moves a little bit beyond the end of 3, avoiding a truncation. Now we have another 5-wave structure up. So we could have 5, 3, 5, and that fits as a zigzag. So there could be a zigzag complete at this high, and it could be followed now by a 3-wave structure in the opposite direction. The biggest structure would potentially be considering a huge double zigzag to move higher. I would label this W and an incomplete X. Now we turn our attention to this next structure, and this is the biggest reason why I'm not publishing this wave count for my membership every week. It has such a low probability. If we're seeing a 3, 3, 5, that would be a flat correction. So far, B has moved beyond the start of A. The problem is the strength within B. This upward movement has strength in volume, it has increasing range, and there was a technical upward breakout at new all-time highs recently, just a few weeks ago, when price broke above previous all-time highs from November 2021 with push from volume. We have a technically significant upward breakout at daily, weekly and monthly timeframes at these highs in February 2024. This does not look like a B wave. There is too much technical strength in this upward movement for me to be comfortable labeling this a B wave. This is not my Elliott wave count. It's not my main wave count, but this is the best bearish alternate I can come up with. I have shown it to my membership. I've published it before on the YouTube channel, and I will acknowledge this is it's decent looking bearish alternate wave count. This would be the only bearish wave count for Bitcoin I would seriously consider. It expects C to now move below the end of A, and when the flat's complete, that would be wave X, and then we'd expect another zigzag up, possibly to be even in length or longer than the first zigzag that ended at this high back here. So overall, for the long term, it's still bullish. It's short term, immediately bearish. Would be looking for a bear market to unfold now for about a year. But the longer term picture, several years, is still overall bullish. There is no rule stating a limit for wave B within a flat correction, but there is a convention within Elliott Wave that states when your B wave is twice the length of your A wave, you should discard the idea of a flat based upon really low probability. In this instance, that price point would be 121,980.21. If we see a new high by any amount at any time frame above that price point, I'll finally discard this and acknowledge the probability is too low for serious consideration. But at this point, I'm not actually seriously considering it because technicals very strongly point to my main Elliott wave count. Technicals for Bitcoin on the daily, it's still within this rectangle pattern. It has been since it entered this consolidation back on 28th of February. Price is moving sideways with a small resistance zone about 73,100 to 71,500 and support about 60,700 to maybe about 60,000. We need to see a breakout above resistance or below support for confidence in the direction of the next trend. At this low, for the 19th of April, there's a really strong bullish long lower wick, and this session has pushed from volume. So this is the lowest point within the rectangle. There's some strength up off this low. I expect the support at 60,700 is very likely to hold. I expect upward movement this week from Bitcoin. Let's see how it behaves when it gets up to resistance. Is it going to just be able to break through and close to new all-time highs, or will it have a little bit of work to do? Will it remain within the rectangle? We'll possibly only be able to answer that toward the end of this week, maybe into next week. Rectangles, when they occur within the larger context of an upward trend, as this one does, are 3 to 2/3 likely to break out upwards. So there's a 66% chance we're going to see an upward breakout from the rectangle. If we did, in the less likely event, see a downward breakout, that's 33% likely, then look for support, final support about 55,000. Here is that strength on that upward candlestick with the long bullish lower wick. So there's a little bit of strength up off that last low. I look for that to try and identify sustained lows. If you have a little bit of confidence that, yep, maybe that low is going to be sustained. Prices within a consolidation and on balance volume also has delineated resistance and support, and both of these lines now have strong technical significance. I'll be watching this carefully this week for a break above resistance or a break below support. A breakout would be a signal either way, and it may come prior to price breaking out, in which case it would give us advance warning of a price breakout in what direction. But if it doesn't, it could come with price breaking out, and if that happens, it gives us further confidence in the price breakout. So this is going to be very important this week. ADX is still telling us there's a downward trend within the larger consolidation. There's the downward swing to the last low, and for the short term, that's a downward trend. The consolidation has pulled ADX down from very extreme. The DX lines have been whipsawing. There's plenty of room for the downward trend to continue before it becomes extreme, but we'd need a break below support before I'd have real confidence in that. But there's also plenty of room for ADX to now turn around and indicate an upward trend. RSI hasn't reached oversold. There's still further room for downward movement to continue. Money flow also didn't reach oversold. Still further room for that downward movement to continue, but if we expect it's going to continue, we need to see a downward breakout before you could have any confidence in that, and if it happens, look for support at 55,000. This is my Elliott Wave count for Ethereum. I'm tentatively going to label this correction complete down here as a zigzag. A, B, C. C moved beyond the end of A. C could be a complete 5-wave impulse with 1, 2, 3. I'm going to put 4 in here as brief and shallow, decent proportion to 2, a little bit more brief than 2, but not too great, and then 5. 4, if it were to continue, may not move into wave 1 price territory above 3413.05. If we see a new high by any amount at any time frame, that would tell us that the 5-wave impulse for C should be over, because upward movement can't be a continuation of wave 4, and so the whole structure should have been over at this low. So this is the price point I'm going to use this week for Ethereum, which will give me confidence in this Elliott Wave count. Confidence seeing the zigzag for minute wave 2 complete. Ethereum expects a third wave up at minute, minor, intermediate, primary and cycle degrees in its earliest days. It's a third wave at 5 degrees, 3 or 4 of them rather large, 2 of them very, very large. This is an extremely bullish wave count for Ethereum. Jack Frost is going to give you an in-depth analysis of Ethereum this week, and I'll put it on the channel hopefully tomorrow or the day after. Technicals for Ethereum finding support still at 3050 at this low. For the 19th of April, there's a Dragonfly Doji suggesting that this pullback may be over and we're in an upward swing. Look for resistance at 3680 on the way up. Prices moving essentially sideways, slightly higher with strongly declining volume. These currencies can be really weak up off their lows. I'll be looking to see if there's some strength and upward movement this week for Ethereum for more confidence that that pullback is over. Ethereum has a really short-term, very weak range for on-balance volume. I'll look for a breakout for a very weak signal. I won't give it much weight because these two lines, the purple support and the yellow resistance, only have the minimum required 2 anchor points. You need to draw a line, and they've both got a reasonable slope and they're short held, but we'll take what we can get. This is a range, look for a signal. ADX tells us there's a downward trend for Ethereum, which is only just extreme, but not nearly as extreme as a downward trend can get. This is short term. The bigger to higher time frames for Ethereum still indicate an upward trend. RSI is neutral, hasn't reached oversold, so there's still further room for a downward trend to continue. Likewise for money flow, not oversold. My Elliott Wave count for XRP will remain the same. I am seeing a combination for intermediate wave 2 continuing further potentially, although it could be complete at this low. For intermediate 2, the first structure in the double is a zigzag labelled minor W. The double is joined by a 3 in the opposite direction labelled X, which is relatively deep and time consuming. X is just over 62% the depth of W. That's not shallow, that's relatively deep. This tells us the structure is most likely a double combination and less likely a double zigzag. They're really different structures. They're labelled W, X, Y, both of them, but combinations are sideways structures and double zigzags are sharp structures that should have a clear counter trend direction. This is obviously sideways. Y is unfolding as a flat correction. You've got a 3-wave structure for A, a 3-wave structure for B, which is a 100% correction of A. So this is indicated as a regular flat. C could be complete down here, moving a bit below A to avoid a truncation, but I'm going to consider what if C is incomplete. Now let's turn our attention to this structure. 1, 2, 3, 4, 5. 5 needs to move beyond the end of 3. So I'm expecting a new low by just a little bit below the low of 3 at 0.4309. 4 maybe continuing a little bit higher. The proportion here is still okay. It can't move into wave 1 price territory above 0.5688. Now that rule, here's a little tip, 4 may not move into 1. It can touch 1. The rule is clear. It may not move into wave 1 price territory. We need a new high by any amount at any time frame above this point, not at this point. If we get that, then this portion would be wrong. I'd label it complete like this. And I'd expect XRP is in the early stages of a third wave up. Technicals for XRP, I had a question mark about this pennant, and I told you last week that you have to be flexible and open-minded with pennants to redraw the trend lines, and sometimes they just don't work. It hasn't worked. Pennants are continuation patterns. There's no downward breakout. Price broke out up above that little resistance line, so this is not a pennant, so we don't calculate a target from the flagpole. Here is a pennant, and there was a downward breakout. The target was calculated at 0.4437. It was met and slightly exceeded at 0.4309, so the result from that pennant has been realised. Now we're looking at resistance again in the 54-55 cent area, fairly decent technical resistance there. So unsurprising, we're seeing a little bit of a slowdown as price approaches that area. Let's see if XRP can move back above that area this week. If it does, next resistance at 60 cents. Currently support at 49 cents and 46 cents. A little bit of a push from volume a few days ago, but now overall price is moving higher with declining range and volume as it hits that strong technical resistance area in 54-55 cents. ADX still indicating there's a downward trend, but only just, and it's not going to take much for the black ADX line to turn down and indicate no clear trend. But there is still a downward trend indicated, and it's a long way from as extreme as a trend can get for XRP. But RSI did reach oversold, and it doesn't tend to do that very often at the daily time frame. When it does that, that's usually associated with sustained lows. So we could have the pullback complete. XRP could be in the early stages of that third wave up. That's it from me today with your analysis, and I hope everyone had a lovely weekend.